Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets are likely to start off on a negative note in the holiday truncated week. SGX Nifty index signals a muted start for the Wall Street. Wall Street, if you talk about the US stock, they stumbled on Friday and Nasdaq snapped 8-week winning streak out there. Asian stocks at this point of time have short-lived. We've taken a dip after a short-lived Russian mutiny. Mercurians made a short-lived rebellion on Saturday, seizing the southern city of Rostov and demanding the removal of the military commanders in charge of the war in Ukraine. Talk about FIIs, they've sold shares worth around 344 odd crore. If you talk about DIIs, they've too been on the selling side and they have sold shares worth around 684 odd crore. Talk about FNOQs. 21 stocks have seen long build-ups. If I'm supposed to name some of them, these includes the like of Aurobindo Pharma, Astral, Bharti Airtel, Dr. Reddy Labs and Trent. 67 of them have seen long unwinding. Amongst them is Oracle Financial, Rain Industries, Hindustan Copper, ACC. Also 90 stocks have seen a short build-up. That's a big number there, which includes the like of Dr. Lal Pathlabs, Hindustan Aeronautics, Ramco Cements, MCX India and Mahanagar Gas. 9 of them overall have seen short covering activities. Now this of course is based on the OI percentages, and based on the percentages, 9 stocks that have been included on the covering list, short covering list, includes the likes of HDFC, Marico, Alchem Lab, Canfin Homes and NTPC. Overall, some of the stocks that have been under FNO ban on the National Stock Exchange, what has been added is Hindustan Aeronautics, and what has been retained is Hindustan Copper, L&T Finance Holdings, Punjab National Bank and RBL Bank on the list. Now let us get going and discuss some stocks and strategies with Aamar Singh, Senior Vice President, Equity, Commodity and Currency at AngelOne. Good morning there.
Yeah, very good morning, Nickey.
How is the trade setup shaping up right now? Do you see some sell-off? Asian markets have clearly taken the dip. Talk about the PCR ratio, and do you see what kind of strategy would you suggest for our viewers out there?
Yeah, so what we've been seeing in the major indices and across the board is that there's definitely some profit booking coming into the markets. And also, if you look at the OI data, we've seen earlier we were seeing some very strong trends in the OI data wherein we were seeing long built up, but now we've seen short built up and then long unwinding happening for the June series. So clearly tells that at the current levels, markets are, I would say, adopting some sort of caution. And also, if we see that go back and we see that this is a double top formation on technical charts also, so the markets would, for any major significant rally, would need to trade above the 18,900, 950 zone, approximately around 19,000. So 18,900, 19,000, that's going to act as a very crucial and major zone of resistance for Nifty, as far as Nifty is concerned. And also, if you look at the major bellwether stocks in the Nifty pack, so be it Reliance or be it some of the banks like ICICI Bank or Kotak Mahindra Bank, we are seeing some sort of, I would say, profit booking happening there. However, what we've seen some positive sign on the HDFC twins. We've seen some positive sign in some of the other stocks. So clearly shows that markets are currently witnessing a seesaw. But the overall, if I look at the overall trend on the weekly charts, that continues to be positive. But one needs to be slightly cautious at the current levels. And looking at the, I would say, if I talk about Bank Nifty, again, Bank Nifty is more or less, it's completely range play right now with a positive bias. And if you look at Bank Nifty, we see that somewhere strong support comes for the Bank Nifty at around 4300, 43,000, 43,350 on the downside, and upside resistance is around 44,000, 44,280. So it's going to be more of a, I would say, consolidation. Some sort of selling pressure also will be there if the market bounces back till we see a really sustained move above the 18,900, 19,000 levels for Nifty.
All right, so I suggested already Nifty and Bank Nifty. If you can also tell us 2 profitable ideas for our viewers out there.
Yeah, sure. So one stock which has defied the broader trend, because we've seen that the broader trend, if you look at the markets from a broader trend, more than 65, or I would say roughly around 67, 68% of the stocks are trading over the 200 DMA. So that's a positive sign. But for the last couple of days, we've seen some profit booking happening across the board. But Exide Industries is one stock which is really very strong on the charts technically, if you look at it. And even I would say from any time frame, be it a medium term, long term, this stock continues to be very strong. So what it effectively means is that currently the stock is around 234 odd levels, 235. So any correction in the stock towards 220, 220 levels can be a very good buying opportunity in the stock from a medium term perspective, with a stop loss below 203 and a target of 243 on the upside. And the second stock to look at is from the I would say the PSU space, and that is NTPC. This is one stock, again, if we look at on the charts, it was consolidating, was unable to breach the 175 zone. Currently, it's around 180, 86, 87 zone. And technically, it's very strong on the long-term charts as well as the intermediate-term trend. So this is one stock one can definitely look at, but only on a correction towards 180, 82. That can be a good level to buy with a stop loss of 173 and a target of 197 on the upside.
Right, those are the recommendation. Exide and NTPC are among the two counters that you can be looking at. But let's get going with the stocks that need to be on your list today. IPCA Laboratories is one among them. Yes Bank, HDFC Life Insurance Company, along with SBI Cards, where the downgrade has come in. Of course, let's start off with a negative development. IPCA Laboratories, where USFDA has issued in Form 483 with 8 observation for a facility, which is a manufacturing facility in Madhya Pradesh. Now, the inspection was conducted during June 15 to June 23rd. A bit of negative coming in on for IPCA Lab, to keep an eye out on that one. Yes Bank, the board has gotten an approval for fundraising. 2,500 crore is the amount, and this can be issued via the issue of debt securities. HDFC Life Insurance, that's another one that you need to keep on your list today. IRDA has already granted in approval for the transfer of HDFC stake in HDFC Life to HDFC Bank out there. Approvals are due to the proposed merger of HDFC with HDFC Bank, as you guys might know, and transaction to acquire an additional share in HDFC Life. So now with this, the holding could be more than 50% of its total share capital. IdeaForge Technology, we're going to be talking about it in just a jiffy. And we're going to be actually giving in the detailed analysis of how you can look at it, probably subscribe for it, not subscribe for it, but that's for that's for a segment at 9:30. But before that, we're going to be talking about SBI Cards, where the downgrade has come in. Now, Nomura has come up with a downgrade report on SBI and has reduced the rating has been reduced, and the target price has been cut to 700 rupees from 1030 that was maintained earlier. That's a sharp up move if you talk about just the stock price's momentum out there. The profitability is expected to remain under pressure. That's the word coming in from Nomura, and it says that the credit industry growth has been moderating. SBI Card continues to lose the market share. That also is probably one of the reasons why they're expecting low amount of profitability. And the industry landscape is changing with an increase in the riskier consumer segment. That's another one for adding to a little bleak outlook there on their bottom line performance. On the pause, they've also spoken, Nomura said that the benefit of policy rate cut on cost of fund to accrue only in FY25. The valuation also is stretched right now, which leaves no margin for error. So a lot of developments, be it the market share, you talk about industry landscape, you talk about risk, you talk about valuation. From all the parameters, this particular, nothing seems to be going great with this counter. So downgrade report coming in, and that is why the reason that you're seeing a sharp correction perhaps on the target price of this counter. So that's the word apparently for the stocks and news that you need to keep an eye out on. Of course, we're expecting some amount of a negative start to build in for markets, but remains to be, it's been very iffy. Nifty has been very iffy of the record high level. A bit of, every attempt to rise near that level, cross that level, has always been reciprocated with profit booking. It's going to be a structural bull run or not, that remains to be seen. But right now, market has been holding around that record high level. A bit of profit booking is creeping in, but remains to be seen if this run that we're seeing this time around is structural in nature or no. We're going to be addressing in the market open in just a bit to see if the market is in line, or Nifty is just in line with the regional counterparts. Asian markets at this point of time aren't really doing too well. They're down and out. in trade today, and that's probably the reason we're expecting. SGX Nifty is also indicating a muted start. Let's see if the market actually plays on to the sentiment that we're looking at. Well, not a bad start, I'd say, for the markets. It's a flattish with a bit of positive bias. Remains to be seen if selling pressure creeps in during the entire part of the day. The counterparts aren't really doing well. But Nifty 50 right now, well, a flattish start. Well, SGX Nifty indicated a muted start in the holiday truncated week. There are slew of data coming in this week. It's going to be an important week in sense of direction, at least from the macro standpoint for the market. Talk about Bank Nifty, and let's see whether we're seeing some amount of outperformance coming in from that one. Well, we are seeing the Bank Nifty doing well as compared to that of Nifty. 0.1% of gains coming in on Bank Nifty index. Let's talk about the mid cap index and the small cap index. There's been an outperformance through and through thus far in the series. But in today's session, probably selling pressure has been felt a little more harder in the mid cap basket, which otherwise has been scaling highs day after day. Small cap index, well, a bit of an outperformance coming in on that one as compared to the entire larger counterparts. But what really comes out as a surprise today is the behavior of Bank Nifty. A bit of positive momentum building in on Bank Nifty, and IT index, like the last couple of days, have been surrendering to the selling pressure. If you talk about the IT index, apart from the other index like metal, well, we're seeing losses to an extent of 0.75% of losses coming in on the entire metal basket right now. And consumption story too remains to be intact for now for Indian equity markets. FMCG, well, some amount of traction building in on that one. Q4 has been rather encouraging. Monsoons, until now, we're closely tracking the developments. And pharma, that's another defensive name for you. Well, a flatter start with a bit of negative undertone. Need to be seen how stocks in the particular basket of this pharma has been doing. That's the one. Realty index, something in the like of, also needs to be tracked just to see how the favor of the market is. And realty index right now, we're seeing 0.25% of loss coming in on that one as well. Let's talk about top gainers and top losers on the index right now for you. ICICI Bank, UPL and Cipla. These are some of the top gainers that we have. Infosys has been doing well. IndusInd Bank and Divi's Lab. These are some of the top gainers that we have on the list right now. Adani Enterprises, Adani Ports and Power Grid. These are some of the top losers that we have on the list. NTPC, Apollo Hospital and TCS. These are some of the other top losers that we have overall on the list. You see the divergent trend playing out within the IT basket, right? Something like an Infosys, something like an TCS. Completely divergent trend. One is the top gainer, one is the top loser out there. Talk about the market breadth. Advances 27, declines 22, and unchanged stocks to an extent just one. So market breadth right now seems to be somewhat evenly divided or more skewed in the favor of advances. I'm going to go back to Aamar and check with him on how is he finding the opening of Bank Nifty, and will you want to revise the strategy? Is it going to be a sell on rise strategy that the market participants should be looking into?
Say that the market definitely is showing some, in spite of the Russian event which happened, but markets are more or less factored in this now. That was more of a non-event. And what we are seeing in Bank Nifty in particular, which you asked, was that, if you look at the major heavyweight banks, we've seen we are seeing them in positive territory as of today. But I wouldn't read much into that, because if you look at the daily charts, clearly they show that there's a very strong, I would say, tussle between the bulls and the bears at the current levels. So what it effectively means is that trading around the support and the resistance levels. So on the upside, I would say somewhere around 44,000, that's going to act as a very strong level. So short selling can be initiated around those levels. On the downside, if Nifty, Bank Nifty comes around 43,350, 400, so that's a very good buying opportunity from a short-term perspective, because the charts clearly show that it is a consolidation which is happening across the board. I would say, be it in Bank Nifty or Nifty, till we see some signs coming, very positive signs coming from the derivatives data as well.
All right, what I also wanted to discuss about is a development which is coming from ICICI Securities, where the company has come up with a press release saying that the board is going to be considering on June 29 a proposal for delisting of equity shares. So that's also one that I would like to discuss from standpoint of charts right now. And of course, SBI cards too, which is expected to, there is a downgrade report coming in from Nomura, which we discussed some time back. Your view on those?
Yeah, I would say that ICICI Securities, if you look at the stock, was actually doing nothing as far as last, I would say, many months is concerned, because the stock was trading in a consolidation zone, not managing to hold above the 500 level. But if you look at the last few trading sessions, I would say beginning from the June 7th of June, we saw increased volume there happening. And again, for the last 3 sessions, we've seen some significant volume happening, and that has taken out the breakout level, which is earlier around 550. So I would say the stock, if you ask me, I would say the stock has a potential to rally towards 650 odd levels. But I would say one needs to be slightly cautious, because the move has been very, very fast from almost 500 to 615. So that's more than 20% rally in the last 2-3 trading sessions. And I'm talking about the other stock which you mentioned, SBI cards. SBI cards, what we see is that the stock did give some very good returns from almost 700 to 950 odd levels, 933 odd. And then it had been consolidating, and we've seen some sharp sell-off currently around 845, 46. If you ask me, the long-term charts, they clearly show that the upside seems to be capped now. On the downside, the stock has got very strong support coming around the 780, 800 zone. Yeah, if that is taken out, then the stock could correct lower towards the 750 levels.
All right, Aamar, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, so what you really need to keep an eye out on will be ICICI Security. We have seen some amount of traction already building in on this one, but the fact that it could delist and there is a board meeting on 29 on account for that is probably the reason for trigger. 9% uptick coming in on that one. But let's actually address in the fundamental story and get in our guest, Antu Thomas, Chief Manager Equity Research at Geojit, PNB Paribas. Good morning out there. I'm going to start off by asking you about your assessment overall on the IPO market to begin with. Sure, IdeaForge technology, that's the one which has come up for subscription today. We are going to be talking about it in just a bit more in detail. But your assessment, would you advise investors to stay off or subscribe to this one?
For the IPO, yeah. Thank you for good morning, and thank you for having me on your show. Before going to that, I just give you some brief idea about the market. That is where I'm like to start. When we see the market on the perspective, we can see that many of the market has been touched the 52-week high. So basically, the FIS remains very positive on these emerging markets. But if you see the surprise interest rate hike by the Bank of England by 50 basis point and ECB by 25 basis point, it is giving a sense that FIS likely to give some kind of turnaround in emerging market especially. And for India is concerned, there may not be that much of cautious approach towards India, because the domestic growth perspective is pretty much good and sure. The recently Fitch, the rating agency also increased the growth forecast for FY24 by 6. It will be around 6 to 6.5% of GDP. That which is pretty much good for the country is concerned. And also the earnings growth, we can say that expecting 18% of earnings growth for FY24, that also giving a good sense of support to the domestic market is concerned. And the caution will be prevail, as you in the remarks you have mentioned, the Russia, any kind of escalation that may need to be create a concern. But when the market is opened, it is flat to a positive trade. We can conclude that may not be a concern for the market at the current point in time. The only concern will be based on the how the monsoon will pan out. Till last week, a delayed monsoon we have seen almost 33 percentage below average the monsoon we have the pan out in the country. So, moving forward, how the monsoon will pan out and how the El Nino situation will take the market, how it will be if the El Nino factors will prevail, that will be a concern for the market, especially in the agricultural sectors, FMCGs and all. I think the market has not yet factored that deficient monsoon and all. EMD also stating that the monsoon will progress in July month and all. That will give a positive sense to the market and all.
All right, Antu, I'm just going to quickly question one last question for you. In terms of the sectoral picks, what would you like within the defense space and also rate sensitives?
Yeah, defense like HAL and BL, we have a positive view on that. Recently, the FOM visit, the Prime Minister visit to the US that creates some kind of positive turnaround in these stocks as well. And we must pretty positive on sectors like auto, infrastructure, capital goods as well. For infrastructure, we like PNC Infra, the company is mainly focused on road construction. Their order books are pretty much good, like almost 20,000 crores of orders they have. That means they have order to revenue ratio will be like 3x, 3 times of FY23 revenue. So it will give us some visibility in the coming year. So the top line will be pretty much protected, and the benign of raw material prices will give more space for their expansion in the margins. We have a target price of 382. That is based on 11x of FY25 earnings. And the positive thing for PNC is basically that there are 22 HAM projects are there. Most of them are in operational space. So there is no question about the land acquisition problem and all. Their balance sheet also is good. They have a less leveraged balance sheet that also giving a good buying opportunity in this stock for a long-term basis.
All right, Antu, thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure chatting with you.
Thank you.
All right, let's bring in and talk about IdeaForge Technology, the drone maker of the 3 idiots fame, has filed for an initial public offering, which opens for subscription today. And it's set to raise around 750 odd crore. The offer period and the anchor book, of course, was June 23rd. For the subscription and for retail and the other institution is June 26, which is today, and closes on June 29. The price band is to an extent of 638 to 672. Not less than 75 needs to be allocated to QIBs, not more than 15 to non-institutional investors, and 10% to retail category. What they're going to be doing with the proceeds? 50 crore will be utilized for repayment, 135 crore towards funding capital requirements, and 40 crore for the investment in the product developments. Some of the strengths, first mover advantage that they have, and the deep understanding of technology product. These are some of the advantages that we have. But let's actually bring in Jitendra Kumar from MC Pro, who covers in the IPO in detail to actually give you an understanding of how we can navigate this particular IPO. Good morning there, Jitendra.
Yeah, morning.
I'm going to start off by your assessment of the key concerns for this IPO before we deep dive into whether the financials and the key strength areas for this one.
Okay, so you wanted to know about the risk basically?
Yes, please.
So, see, the company was in news during its IPO. Some of the reports said that they made with failure few products, or some incidents happened where drones crashed and people argued, and there were some litigations with the authorities as well. So that is one risk that I see because in the past the company has gone through those failures, basically. So that could be a possible risk to its post-listing prospects, given the fact that the people might question about their sustainability and all these things. And the second thing is about the order book. Order book currently, although the company is saying that they are expected to receive good orders, but currently the order book is only one time its book, and it has not moved much. In fact, it has fallen. So that we will have to really watch over a period of time, maybe 6 months, 12 months down the line, and see whether the orders are actually flowing. So those are possible risks that I see as of now.
All right. Talk also about some of the strengths that this company has. Some of them that I feel would be first mover advantage, of course. And there is also a ban on imports, PLI scheme, and prevailing anti-China sentiment, which works in the favor. What are you looking at?
So the first and most important part of the entire, the IPO, what we really like about this company is that the promoters, the founders are so passionate about what they are doing. The founders, experimented making drones in 2004 when the world did not even know about the drones. So they have a deep understanding of technology, their experience, and importantly, they have a research mindset. And so that excites us because, if you are doing something if you are doing something that you love, I think that the product has to come out well, and the market will appreciate it, and which is what we have seen in the numbers today. In terms of business, if you look at, they are present across the categories of drones, which many of the competitors cannot even think of. Some of these drones that the company is making are highly capable and superior in technology. People can't even imagine. So and the fact that the company has a market share of almost 50%, and they are 7th player in the world, it speaks a lot about their cutting edge technology products, and which are most of these drones that they are making are fit for different requirements like defense, mapping, civil infrastructure, logistics. So they have across the board capabilities and product profiles which can cater to different needs. And as I said, 50% market share speaks a lot. So this is what we really like about it.
Sure. I would also want to understand about the financial profile of the company. Do you see the margins shrinking a little bit, or profitability being on a little bit, not a little bit iffy, if I may put it that way?
Yeah. So there were some hiccups, ups and downs, largely in the fiscal year 21, but 22 was good. But again, in fiscal 23, the company's profitability dropped. But the management said that was largely because of the ESOP impact. If you remove that, the profitability, the EBITDA margin, they said was almost 47%. So they are hoping that if we exclude that one-time impact, the profitability and margins should be better. And remember that, they did not have capital earlier. So this pre-IPO and post-IPO money would be almost 300 crore. They will be retiring some of their debt. They will invest 40 odd crores in product development. There is 135 crore being earmarked for working capital. So they have a lot of money in their hand. I mean, their current, net worth is around 300 crore. On current net worth of 300 crore, they are adding another 300 crore. So you can imagine the kind of cascading impact it would have on the scale, margins, working capital, return ratios. And of course, it is a company which was at a very nascent stage. They were experimenting too many things, getting approvals, reaching to people and customers and the right market, and all this require, it's like a startup where, you have some ups and downs because of the fact that you are still evolving as a company. But I think they have come to a stage where the maturity is, they should show maturity in the coming years. And that's what I feel like,
Sure. Apart from that, also one last question that I have is, talk about the valuations, and do we have, I'm sure we don't have like a listed, since it's the first mover advantage, we wouldn't typically have listed players in the category. But how are the valuations stacking up?
So valuation, we did estimate. We made an estimate because the fiscal 23 numbers are impacted because of the impact of ESOPs, the company said. So we went beyond 23. We estimated numbers for FY24. So based on that, the IPO is priced at about 47 times. Okay, so now 47 times when we compare it with the
selling shareholder, but the notional value of its investment over the last 6.5 years rises almost 6 times from where it was. Not a selling shareholder, but definitely make some capital gains coming in by investment with this IPO. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.